Hi there! Ever wondered how people grow their money over time? Maybe you've heard of stocks or crypto but thought, I don't have enough to start. Well, guess what? You can begin investing with just $100. Whether you're saving for the future or just curious how investing works, this guide will help you take your first steps toward building wealth. Investing is like planting a tree. You start small, but over time, it grows bigger and stronger. The earlier you start, the more time your money has to grow through compound interest. Compound interest means your money earns more money over time. For example, invest $100 at 10% interest, and you'll have $110 after 1 year. In year 2, you earn interest on $110, not just $100. Over time, this snowball effect can grow small investments into big gains. Why does this matter for you as a grade 10 student? Starting early gives you a big advantage. Time is on your side. Even small, regular investments can grow over time. Your contributions can become something substantial. Think of it as planting seeds for your future. Small steps now can lead to big rewards later. Before investing, take a moment to think about your goals. Ask yourself, why do I want to invest? Your goals shape your investment choices. For example, are you saving for something big, like college? Do you want to build long-term wealth? Or are you just curious about how investing works? Clear goals help you stay focused and motivated. For example, if you're saving for college in 5 years, you might choose safer investments that grow steadily over time. But if you're investing for the long term, 10 years or more, you might take on more risk for higher potential returns. To start investing, you'll need a platform to buy and manage your investments. Here are some beginner-friendly options. First, robo-advisors. These invest your money automatically based on your goals and risk level. Apps like Wealthsimple or Betterment handle the hard stuff for you. Or try apps like Acorns or Stash. You can start with just $5. Acorns even invests your spare change. Great if you're on a budget. Brokerage accounts like Fidelity or Charles Schwab let you buy stocks and funds directly. Many now offer fractional shares, so you can invest small amounts in pricey stocks like Apple or Amazon. Every platform has pros and cons. Take time to explore and find the one that best fits your needs. If you are unsure where to start, beginner-friendly investment apps are often the easiest and most accessible option available today. Now comes the exciting part, choosing where to put your $100. Here are some beginner-friendly options. First up, index funds and ETFs, exchange-traded funds. They're collections of many stocks bundled into one investment. Instead of buying shares in just one company, which can be risky, these funds let you invest in a slice of the whole market. For example, an ETF tracking the S&P 500 includes shares from 500 large US companies like Apple and Microsoft. These funds are usually low cost and less risky than trying to pick individual stocks on your own. Okay, next up, dividend stocks. Some companies pay part of their profits back to investors as dividends. So, investing in dividend stocks means you'll get regular payments, and at the same time, you could benefit if the stock price goes up. Even with just $100, you can invest in companies that consistently pay dividends to their shareholders. So, fractional shares. If a stock costs $1,000 a share, fractional shares let you buy just a small piece. Great for beginners who want to invest in big-name companies without breaking the bank. Alright, now on to cryptocurrency. Digital currencies like Bitcoin and Ethereum have gained a lot of popularity recently. Crypto can offer big rewards, but it's also super risky. Prices can change a lot. Fast. It's okay to start small. Only invest what you're comfortable losing. Better safe than sorry. One of the best strategies for beginners is dollar cost averaging. It means investing small amounts regularly instead of putting all your money in at once. For example, instead of investing $100 right away, you could split it, like $25 each month. By doing this consistently over time, you'll reduce the risk of accidentally buying when prices are unusually high. Consistency is key in investing. Even if you can only afford $10 or $20 a month, those small contributions add up over time thanks to compound interest. Fees might seem small at first, but they can eat into your profits over time if you're not careful. Watch out for platform fees. Some platforms charge for managing your account or handling transactions, and those costs add up. Expense ratios. If you're investing in ETFs or index funds, always check the expense ratio. It's the yearly cost to manage the fund, and it's really important to know. A good rule of thumb is to look for funds with expense ratios under 0.5%. Choosing low-fee platforms and investments helps you keep more of your money working for you instead of paying unnecessary charges. Sounds like a win, right? Investing isn't about getting rich quick. It's about growing your money slowly and steadily. The market moves daily. Don't panic if your investment drops for a bit. Long-term growth is what truly matters. For example, imagine planting a tree. It won't grow overnight, but becomes strong, tall, and beautiful after years of care. Similarly, successful investors stay patient, think long-term, and avoid emotional decisions triggered by short-term market fluctuations or noise. As a student, patience is especially important. You're likely investing for decades, building wealth slowly over time. Here are some additional tips to help you succeed as a young investor. Educate yourself. Read books, take courses, or watch videos about investing basics to deepen your understanding. Start small. Even if all you've got is 10 or 20 bucks, that's enough to begin. And be super cautious with get-rich-quick schemes or jumping into risky stuff like penny stocks. It's just not worth it. Track your progress using apps or a simple spreadsheet to see how your investments grow over time. Starting with $100 might not seem like much, but it's a powerful first step toward building wealth. Choose an investment platform that fits your style and go with beginner-friendly options like ETFs or fractional shares. Stick with it. Make regular contributions, even if they're small. Over time, those small investments can really add up. So, what are you waiting for? Take that first step today. You've got this. Investing early helps secure your future and build skills that'll pay off for